Hey everybody, it's Paul Rubillo, ActiveStocks.com. Let's talk about a whipsawing market. That's what we're seeing in today's market. I want to bring it up as a topic. As a trader for many years, one of the things I learned is when the market has some wild spikes, what we're seeing, again, opens down, shoots back up, tumbles back down, shoots back up. That's a whipsawing market. That's a market that just trying to figure out what direction it needs to go in. When we see this type of action, it usually precedes a shift in the market. So let's say we've had 3 or 4 good months, then we see this sort of action. Be careful. This might indicate that we might be in for a little bit of consolidation to a lower move if the previous 3 or 4 months have been good. Vice versa, if we've been in a drought for 3 or 4 months, the market has just been struggling, and all of a sudden it really gets a little wild, it might be indicating that we're ready to make a move perhaps higher. So be aware when you see this sort of thing happening in the markets, there might be something coming beyond it. As far as position size, when you're trading in this type of environment and there's a lot of whipsawing action, one of the biggest things I would recommend is take down your position size. If you trade 500 shares normally, trade 200 shares. You don't have a good feel for the market when you see this sort of action, and some traders just aren't nimble enough to keep up with all those changes, so you don't want to get caught up in a day where you're making 20 trades and net at the end of the day you're losing money because you just can't get that good feel. So when it's like that, take down your position size and do a little less. Doing less is more on a day when the market is whipsawing. That's it, everybody. We'll see you guys next time.